Hi, good afternoon. I am Sean Chia, the Executive Director of the Malaysian International Chamber of Commerce and Industry. We are the oldest chamber in Malaysia, and this is one of our webinars, a series of webinars together in collaboration with Crowe Malaysia. Today, we have Mr. Chong Man Yu, the Executive Director for Tax at Crowe KL Tax, to share with us about sales and service tax, some of the regulatory updates. To our Facebook audiences, if you have any questions, you may drop it in the comment section and we'll bring it forward. For those that are sitting in the Zoom room, you may also drop your questions in the chat box as provided. Our speaker will try to answer some of the questions during the Q&A sessions. Mr. Chong, are you ready? To hand the floor to you.
Yes, thank you very much, Sean.
Okay, the floor is for you, Mr. Chong.
Thank you, thank you. Hi, ladies and gentlemen. Welcome. Now is about 12. I'm sure all of you, actually this is lunchtime. So it's, we really thank you for all the sacrifice you make to sacrifice your lunch, especially to join with us for these sessions. In life, sometimes these are the little things that, little steps that we take that will actually help us to be successful in the future. Small habits like Jim Rohn, I don't know whether you heard of him. He said, in life, the big success, it won't simply come, but these are the small little steps that we can take now. And once we accumulate enough of these small steps, success in the future will come. So without much further ado, let maybe just we proceed with the slides. Let me see. Okay. Okay, maybe we can go to slide number 7 itself. Yeah, okay. How we manage this session will be that we will share about the sales tax and service tax. We'll go through the slides. Then later, after that, we'll go through the Q&A. So we hope to finish by 1:30 as promised. And yeah, I hope all of you will have beneficial time for this webinar. Okay, for these slides, what I wanted to share is that one of the updates is that cessation of SST legislation. This is effective 1st January 2021. Before this, we have actually a method by custom future method. This is future method. Effective 1st September 2018 to 31st December 2020. Then after that, they moved to the historical method. Here, this is immediately preceding. So what happens is that instead of looking at the future, before you can cease your SST registration, now they say they look backwards. So by moving these methods, it seems that it is slightly more difficult to actually cease to have your SST registration, because last time you look at the future, so you know that roughly in the future what you're going to get, your revenue drop by less than 500,000. But if you look backwards, so if let's say you already have a history of 500,000, and in order to drop it, your history will still carry on. So that's slightly more difficult. Okay, moving on to the next slides. Slides number 8. Here, what we wanted to share is on enforcement. This is effective January 2021. 3 items we would like to share with you. Power to seal. Okay, this one I will leave it at the next slide. I mean, I will share more with the next 2 slides. What happened is that power of seal, if I can explain briefly, is the custom officer, the SST officer, can actually seal any goods, documents, articles, or things, or even premises, places, packages, or even container. So why they want to do that? This one is actually already in existence, even in the Custom Act. The reason is that because due to the nature of the article, or it could be even the size or the amount too much or voluminous, so therefore they can have this power to seal off the building, the article, or even the container. The offenses for not complying with this is actually, let's say someone go in and then go break the seal. It can have an imprisonment term of 5 years, or even 100,000, or even both. So that is the severity of these offenses for not complying. The other one, the next one is additional powers. So what are these additional powers? Under this amendment, what it says is that the SST officer, they are given the power of a police officer. So equate them, SST officer, with the power of the police. But of course, of a certain rank, like let's say a corporal, or even below, or a sergeant under the Prison Act. So meaning that now the SST officer, they are quite powerful. They are like the police. That's the item number 2. The next one we want to talk about is actually the power of enforcement, inspection, and investigation. So here what it says is that the senior SST officer shall have all the powers of a police officer. Rank as provided under the CPC is called Criminal Proceeding Code for enforcement, inspection, and also investigation. One more issue that we would like to highlight is that under this item number 3, there's also this item called evidence of agent provocateur is admissible. Okay, maybe I just explain a bit more on this. Okay, what is this agent provocateur? It is actually under the criminal law, where you have all these agent provocators are actually somebody they are being engaged to go together with the criminal to commit an offense. Okay, if I can give you an example of, I'm not sure whether you remember this show long time ago. It's called Entrapment. It's with this Sean Connery and Catherine Zeta-Jones. So what happened in that show is also filmed in our KLCC, the tower, the Twin Towers. So what happened is that, of course, Sean Connery is the bad guy, and then Catherine Zeta-Jones tried to entrap him, and then try to catch him also. So because of that, under this new amendment, it says that the evidence collected by all these agent provocators, they are actually admissible, although they are being engaged to help somebody to get into that, let's say, commit a crime, like let's say maybe the goods, they try to bring in goods illegally and all those. So all these evidence are actually admissible. Okay, next slide, I would like to show you some of the seal. This is slide number 9. This photo actually shows that this is one of the seal being used by the SST officer to seal off a container. Why seal off a container? Because container, the size is very huge, and maybe the quantity, the volumes of the items inside the container is a lot. So one of the methods is they seal off the container. So they put this seal, this yellow colored thing is to seal off the container, and you cannot break the seal. You cannot simply break it. Once you break it, then it's actually an offense. And if I can show you the slide number 10, some of these other seals being used are the various types. Can show you is that you see the yellow one, and then there's an orange, and then the various types. So all these are being used for various items, or even premises, or even articles. So these are some of the examples that I can show you. Slide 11. Okay, this one, it shows that that's how they seal up the building. So you put the yellow tape there and say that do not cross. So it is sealed. So if anyone breaks the seal and enters the building, that will actually constitute the committing of an offense. Okay, moving on, we would like to talk about something slightly different. This is on reimbursement versus disbursement. Yeah. So, okay, let me see the slides. Let's go to slides 13. This is on the guide of reimbursement and disbursement, effective September 2020. So here we need to be very clear of these two concepts. One is called principal or agent rule. What happened is that in order to determine whether the expenses being recovered, is it a disbursement or is it a reimbursement, you need to establish whether are you acting as a principal or are you acting as an agent when you acquire the services from the service provider. Here there are two ways how we can look into it. The first one is actually the written contractual agreement. When you have the written agreement, of course it is clearer because all the terms usually will be stated in the agreement on whether the claimant incurred the expense either as an agent or as a principal. But we also have a second situation where you do not have the written agreement. Then what should we do? So here we will need to establish certain conditions. First one, of course, is the contractual liability and assumption of responsibilities and risks. So that's the first point. Second one is we need to look at the legal obligations to make payment or payment arrangements. Third one is, can we change the nature and value of the expenses? So that's the third point. Fourth one is identities of the parties and the transactions. So these are the 4 bullet points that we need to take into account in order to come to the conclusion, are you acting as a principal or as an agent? Okay, Moving on to slide number 14. Okay, there are three conditions that actually we need to look into if we want to fall under this we call disbursement criteria. Okay, before that, maybe a step back is that why is it so important to distinguish between reimbursement and then disbursement? Reason being is that if you fall under disbursement, you don't need to charge SST. But if you're under reimbursement, then you have to charge SST on those expenses. So that's the reason why we need to distinguish these two, reimbursement and disbursement. Okay, let's look at the number one. Is service provider. Okay, what does it mean? It means that the customer know the services are actually made by the service provider and not by the claimant. So they were very clear who is the service provider. So are you just claiming or are you the one providing the services? So number one. Number two, value of services. Okay, what does it mean? The exact amount is claimed from the customer and the claimant shall not change or alter the nature of the services or add on the value of the services. So in order to fall under disbursement, you cannot change. You cannot even change the nature or you cannot add value to it. Everything must be exactly the same. So then you fulfill the second condition. The third one, this one by far, I think the most difficult condition to fulfill. Later I'll explain why. Okay, but let's look at the details. A copy of the invoice from the service provider is attached together with the invoice issued by the claimant to the customer as a supporting document. So this one I say is quite difficult because sometimes let's say you engage other people's services, you don't want to show the other parties' invoices because once you show, then your customer will know that how much is your margin and all those. So most of the time, 1, 2, I think is okay. Only the third one is very difficult. And because of that, if you don't attach, then you won't be able to fall under the disbursement. Okay, moving on. We will move on to another item for updates is on management service. Okay, let's see the details on slide number 16. Okay, this is the guide on management service. Two updates provided. One is October 2020 and January 2021. So effective date is actually from 1st September 2018. This under Group G, item 9, Group G, and under the Regulation 2018. And the amendments, all these subsequent amendments do not affect the liability of service provider to comply with the provision under the Service Tax Act. Okay, let's move on to the next one, 17 slide. Two words are actually quite difficult to really understand and apply is the word arrangement and coordination. Seems to be very wide, cover a lot of things, and we don't know where to draw the line and the boundaries. Okay, moving on, maybe I just give you some of the management services that are covered under this category. First one will be the project management services, either in full or part of the project. So this is project management. Second one is tourism management services. This one only effective from 1st September 2018 to 31st August 2019. So subsequently from 1st September 2019, this one has been taken out. Okay, similar to the tourism management services, we have another one, logistics management services, also only effective from 1st September 2018 to 31st August 2019. Thereafter, it has been taken out. Then we have other management services, like for example, maintenance management services. Next one is warehousing management services, collection and debt management services. Next one, we have car park management services, sports facilities management services, and secretarial management services. We have a last category where it is quite open-ended. Any other management services made on behalf of another person. So this is very wide. So what is it inside? And where do we draw a line? So if we don't fall under the top portions, will we ever fall under the last category where it's a catch-all category? Okay, let's move on. Slide 19. We'll look at some of the examples. Okay, this is on building management services. Example 1. Here we have a situation where shopping mall is owned by A Sdn Bhd. So you can see the shopping mall, the A there. A Sdn Bhd is appointed by B Sdn Bhd service provider. Okay, A Sdn Bhd appointed B Sdn Bhd to manage the maintenance services of the shopping mall. So you can see the wording there, provides building management services. So then the issue is this building management maintenance management services provided by B to A, is it subject to service tax? So that's the issue. The answer in short is actually it is subject to service tax. So for this maintenance building maintenance services are subject to service tax. Okay, moving on to the next example. Just want to show you how it works. So we have a case where A Sdn Bhd, the owner of complex, leases shop lots to tenants and maintains the complex itself. So it leases out, but actually A Sdn Bhd maintain the complex itself. So they are doing all the maintenance, whatever. So A Sdn Bhd only charges rental on the shop lots and does not charge any maintenance management services. So then the issue is this, the rental fee, is it subject to service tax? So the answer is the rental charge is not subject to service tax because this is purely rental. Okay, moving on, we move to example number 3. Here we have a situation where A Sdn Bhd is the owner of the complex, leases out the shop lots by charging rental fee and maintenance management charges separately. So this example is slightly different from the example 2. Here we have rental fee and also maintenance fee separately. Just now the one only purely rental. So in this situation, how do we treat? If it's maintained separately, the rental charge is not subject to service tax, of course, exactly the same as example 2. But the maintenance management services provided are actually a taxable service and it is subject to service tax. So how you disclose is also very important. If you disclose everything in a one lump sum figure, rental fee and maintenance fee separate, let's say together, then we have a situation that if you cannot separate them, this whole thing will be subject to service tax. But if you can separate them very clearly, what is rental and what is maintenance, only the maintenance fee is subject to service tax. The rental is not. Okay, moving on, we will go into this guide on management service. This one, there are 2 updates. One is October 2020 and January 2021. Okay, the first, all these are actually non-taxable management services. So this one, it provides a clue to us of what can be excluded. Okay, let's look at the first one. First one is residential. Okay, what does it mean? What does it cover? Here it covers anything in connection with land, building for residential use provided by any developer, JMB, MC, or residential association. So very clearly, these are all for residential. This is not for commercial. So as long as you are residential, you are exempted from service tax. Okay, next category we have fund management. Okay, what does it cover? For fund management, it is for those that are services provided by any person licensed or even registered under the Securities Commission Malaysia. for carrying out regulated activity of fund management under this specific act is called CMSA, Capital Markets and Services Act 2007. So if you fall under this category, then you also will be excluded. Okay, next category we have is specific purposes. Okay, very specific. So what are these? So you may be asking. So these are actually provided by any person, government agency, local authorities, or statutory body for purposes of, okay, there are various purposes: religious, welfare, bereavement, burial, cemeteries, cremation, sewage, water supply, health, transport, tourism, or logistics services. So if you fall under these categories, these specific purposes, then you'll be excluded. There's no service tax on this. Okay, next item number 4 is outside Malaysia. Okay, very big category. So what is it? This one is in relation to services provided in connection with goods, land, or subject matter outside Malaysia. So you fall under this that are not related to Malaysia, or even the subject matter is outside Malaysia, then you are excluded. There's no service tax on this. The 5th category, what we have is within the same group. Okay, this is the relief within the same group. So there's under this category, you need to look into the structure of the group of companies. Your group structure fall within the group? You need to do consolidation. If yes, then most likely you will fall under this group. But you have to be careful that there's a threshold of the 5% of the same service. If you also provide outside, if it's more than 5%, then you may be you may disqualify yourself from this exemption. So you need to look into that very carefully. Last category we have is B2B exemption. It's a business-to-business exemption. This is effective from 1st January 2019. Okay. Moving on to the next one. This is a service tax updates for directors. So I'm sure some of you are actually directors. So we need to see the position of whether are you subject to service tax or not. Looking at this guide on professional service, this effective issue October 2020. We have 2 types of director. The first one is a contract of services. Later we look into it. What is it? Second category we have is a contract for services. So let's look at the first one. What is inside? Okay, contract of services. This one is for a person appointed as a director in the capacity of his post, contract of services, or in simple terms is called underemployment. So here we have a master-servant relationship. If you have the master-servant relationship, you will fall under this category. So if you fall under this category, whatever being paid to you, all these payments are actually not subject to service tax because there's a master-servant relationship. Okay, let's look at the second categories where we have a contract for services. This one is usually for a person being appointed as a non-executive director on his capacity under contract for services to provide maybe some expert opinions. Very often will be like, let's say, for listed companies, they have all these non-executive directors sitting at the committee and all those, but they don't really run the operations of the company. They will just sit in there, maybe they are expert in certain fields, like maybe they are engineers or accountants, or even they have industry or certain specific industry knowledge because of their very long working experience. So they'll sit there and give the expert opinions to the board of directors or even to the companies. So what happened is that previously the guide mentioned that all fee charged by the director under contract for services should be subject to service tax. So catch all, everything you pay to this director, everything subject to. However, there is some amendments being made. This one is based on a new guide issued on 6 October 2020. Here, it only limits only one item that is subject to service tax. So only the director's remuneration or fee subject to service tax. The rest of the items not subject to service tax. For example, not subject to service tax. This will be including director's allowances, such as meeting allowance, monthly allowance. This one excluded. Benefit in kind, also excluded. Reimbursement or disbursement, this one also excluded. So one of the implications is that previously some of these directors may have, because by taking into account all these other elements like directors' allowances, benefit in kind, reimbursement, disbursement. So by putting all these elements before this, the threshold may be triggered. Maybe you exceed the 500, then therefore you go and submit all these service tax return and all those. But under this guide, then you need to re-look into that, the threshold, whether by taking out all these other elements, will you fall below? So if you fall below, then you may not need to subject to service tax on the director's fees. So you need to re-look into this. Okay. One note to point out is that this guide on professional service is no longer being published in the My SST portal as of to date. So not sure why they remove it, but when we look at it, it's actually, I mean, these are the conditions. So very important in SST is that whenever you see something that is applicable and you take a position relying on that guide or whatever, make sure you download a copy, a soft copy, so that because these guides can be removed, I mean, without notice, it will be removed from the website and all those by these customs. So you download a copy, you take the position and you keep the copy. So in the event of being questioned or even challenged by the customs, then at least you have a position. You say, based on this, I take a position and I follow this guide. So at least you have some basis to defend your position. So this one of the advice that we can provide to you. Moving on to the next item will be, okay, this one is on service tax updates, MTJA and JDA exemption. We'll go more into details. What is this? Okay, in the next slide. Okay, what is this? This is based on a service tax policy 1/2021, issued 27 May 2021. Okay, looking at the date is 27 May 2021. But let's look at the details. This is actually effective from 1st May 2021. So you note that there's a discrepancy in terms of the date. 1st May and 27 May. Later I explain what happens in between this 1st and 27. It's issued under the minister exemption under 34 sub 3 sub A of the Service Tax Act 2018. And it covers the Malaysia-Thailand Joint Authority. In short, we put MTJA, and companies operating in the Joint Development Area, or we put in short is JDA. What it provides is that it's exempted from payment of service tax on taxable services provided within the JDA, the Joint Development Area, by any company in the principal custom area. Okay, maybe let me explain a bit how this thing works. This exemption is actually effective 1st May 2021. However, during this transition, what happened is that any service tax collected from customers from 1st September 2018 until before the effective date, which is 30th April 2021, must be remitted to the customs. So whatever collected, you have to remit to the customs. This is under Section 26, Service Tax Act. And the other thing is that any application for refund for service tax paid before 1st May 2021 cannot be approved, meaning that whatever paid means you have paid. No approval for refund, so you cannot apply for refund. So that's one point. The other one is what about the service tax for services which have been provided by the providers, but you have not issued any invoice, or service tax has been charged but have not been paid by the customer. So you charge, but customers haven't paid you, or you haven't issued the invoice. For these two categories, the remission will be given. So if you haven't issued an invoice, good news. If you have charged customer, also haven't paid you, also good news. So you'll be remission, no need to pay. However, there's one point that we need to highlight, is that no service tax exemption shall be given on two items. One is importation of taxable services, and the other one is digital services into JDA. These two, there are no exemption. So do take note, not everything will be exempted. Moving on to the next item, GST remissions or penalty. Okay, let's look at the what are the details. Here, the payment remitted between 1st May 2021 to 31st August 2021. Okay, there are two categories. Let's look at category number 1. Here we have a GST registered person pays off the full amount of GST and penalty. So here you'll be entitled to, this one is for company with outstanding GST and penalty. So if you have that, then 100% remission of penalty will be given. So you just pay the GST and the penalty will be remitted. There's a second category where we have the company with outstanding penalty only. So category 1 is outstanding for 2, GST and penalty. So penalty can be 100% remitted, means can be waived. Second category is you only have the penalty, but GST you have paid. So here, under second category is that GST registered person, you need to pay the 20% penalty being imposed. 80% will be entitled for remission. Remission means it can be waived. Okay, okay, let me see. I've covered everything already. Maybe we will go to the Q&A. So some of your participants have actually submitted some questions prior to this the start of this webinar. So we have gone through some of the questions, and we have actually compiled most of the questions, and for easy reference and that you can read properly, we have reproduced some of these questions so that you can see, and then how do we manage and give solutions. So okay, maybe we go to first question itself. Maybe I can read it to you. Here it says that question number 1, say what are the conditions to meet in order to claim back sales tax paid on imported goods that are sold to ship chandler businesses or re-exported to customers in overseas countries. So this one is claim back sales tax that has been paid. So how we approach this is that, of course, this one is in relation to a drawback. So drawback, as you know, that there are list of conditions that are very detailed. So two elements that we would like to highlight that they are key. They are key that you must fulfill is this: the taxable goods have been exported within 3 months, meaning that once you bring in the goods within 3 months, it must be exported. So we call it the 3-month rule. So with this, this is one. This is key. If you don't export it 3 months, then you may need to get approval from the DG for extended period. Otherwise, if you don't have 3 months, it must be out. The other condition that we think is key among all the other conditions will be this. The taxable goods are not used after importation or after payment of sales tax. So it will be a situation where you bring in the goods and then you export out. So you cannot use it. You cannot use it for, let's say, for your manufacturing, whatever. If you use it, then this thing doesn't apply. So it's only a case where you bring in and then you export out within 3 months. So those two conditions that you must meet. So if you fulfill those two, then these drawback facilities will be applicable to you. Okay, that's question number 1. Okay, let's look at question number 2. Okay, if I can read it to you. Our company is producing non-taxable goods. Hence, we are not registered manufacturer. However, we do purchase raw materials which are subject to sales tax. Currently, we obtain SST exemption under Schedule B. However, we still find there are some gaps in compliance with the customs requirement. Therefore, we would like to inquire whether sales tax drawbacks is applicable for non-registered manufacturer. If yes, how is the application process? Okay, long question. Okay, but how we address this question is that okay, drawback of a sales tax is allowed on taxable goods either imported or purchased from a registered manufacturer, which are subsequently exported, regardless of whether you are registered or non-registered manufacturer. Here, but here in the case where it would, but so what I wanted to say is that this would mean that the drawback is not applicable to raw material if you have used the raw material in the manufacturing of goods. This is similar to question number 1. So the issue is that if you bring in the goods, you export it out within 3 months, then you can apply for this drawback. But you bring in, then you use it in your manufacturing, so a big problem already. Then you cannot claim this drawback facilities. Okay, okay, we can go to next question, question 3. Okay, here it says that what will be the changes of sales tax for movement of goods from free zone to licensed manufacturing warehouse, principal custom area, PCA, in short LMW and PCA. Okay, so how do we approach this is that we'll break it into 2. One is free zone to LMW. Free zone is considered the SA also, special area, and then special area. So here is goods transported from free zone to LMW are not subject to sales tax as provided under this paragraph 57A of the Sales Tax Act. And you need to declare this under the custom form K1. So not subject if SA to SA. However, if let's say in the situation like in the case in the question itself, from free zone to principal custom area, so the taxable goods transported from free zone into principal custom area are to be declared under K1 and subject to sales tax. So in this case, so it depends. So if you are free zone to LMW, you are okay. If free zone to principal custom area, you are not okay. It's subject to sales tax. So that's the answer to this question. Okay, moving on. Before that, let me take some water. Okay, this question for how, okay, maybe I just read to you. What is the minimum sales threshold that require SST? Okay, how do we address this question is that the total sales value of taxable goods for the purpose of registration of any manufacturer is prescribed under the Minister of the Sales Tax this there's a value, it's 500,000 per year, and this 12 months is actually a rolling 12 months. It's a moving 12 months. So let's say January to December you don't fulfill, then we look at February until next year January. If you still don't fulfill, then March until next year February. So it's a moving 12 months until you fulfill. Once you fulfill, then you need registration, and then you need to charge the sales tax. Okay, moving on. Question number 5. Any impact on healthcare industry for the new SST regulations? Okay. Okay. How we answer this is no impact on healthcare facilities registered under, these are various types of act. First one is Private Healthcare Facilities and Services Act, or even Government Healthcare Facilities and Healthcare Facilities established under University and University College Act, or University Technology MARA. All these are excluded. The exclusion are still in place. Okay. Next one, question number 6. Okay, what about this question? Service charges and sinking fund for commercial building, is it subject to 6% SST? Okay, here how we approach this question is that if the service charges and sinking fund for commercial buildings are in relation to taxable services, for example, like preventive maintenance. Okay, there's a distinction between preventive maintenance and corrective maintenance. Okay, maybe just finish this one first, then I explain. So if you are preventive maintenance, management services, then it will be subject to service tax. Okay, there's a distinction between preventive maintenance. This one is a scheduled maintenance. So like you arrange in your calendar, when are you coming over to do the servicing and all those. So this one, scheduled one, it is subject to service tax. But there's another one, corrective maintenance. This one is whenever there's a breakdown or something spoiled, then you call the people to come and fix for you. So this one is a very ad hoc type, not the scheduled type, very ad hoc one. This one is not subject to service tax. So you need to be very careful of what type of maintenance are you doing. Are you doing the scheduled one or the ad hoc one? Okay, moving on. Next one, let's look at question 7. Here it says that what are the conditions and procedures to follow in order to claim back sales tax when re-export goods which were imported with sales tax or selling them to ship chandler's business? Okay, I think this question is quite similar to the one that we answered, I think question 1 just now. So I will not repeat all those, but key conditions are you need to, the three months rules. The second one is the whatever goods you bring in cannot be used. You cannot use it. If you use it in your manufacturing, then you cannot apply for the drawback. Okay, next one. Let's look at question number 8. Okay, this question is very short. It says, should a new business just registered with SSM registered for SST as well? Okay, this is a quite a short question. What we can say is that since there is no input tax mechanism for SST, not like GST. Last time, whenever you register a company, we want it to be registered for GST because you have input tax. So the faster you are registered under GST, then you can claim back all the input. But SST, we don't have this thing. So because of that, under the SST, it is only advisable to register when the company has exceeded the prescribed threshold. So if you hit the 500, then only you register. Otherwise, you don't need to. Also, an advantage is that if you don't exceed the threshold, then you don't need to charge. Then possibly your cost will be lower, and I mean, you have a lower cost. But of course, once you reach the threshold, then you need to register. So some people will also ask, let's say my sales volume already reached like 480. So do I need to register? So this is a dangerous zone already. You're not sure, because 20,000 is very easy to break. So you need to monitor very closely. Because the moment you reach and you forget to register, then you might invite some penalties to be imposed. So do take note on that. Next question, 9. Okay. This one is, it talks about, could you please define and elaborate the differences between reimbursements and disbursement? Okay, like just now I explained earlier. So we need to do this distinction clearly, because reimbursement is subject to service tax, disbursement no. But in order to fall under either category, then we just now explained that you need to look at the written contract. Does it say that let me see. Yati, can you hear me?
Yes, can hear you clearly.
Oh, okay. Because there's a message come out to say that I have left the meeting. So, okay, sorry, something just came out and say that I have left the meeting. How come? Okay, just now I was saying that in order to fall under disbursement, there are 3 conditions that you need to look into, which I explained just now. But of course, for disbursement, the last category which I mentioned, very difficult for people to fulfill, is that you have to enclose that invoice when you seek the service from the other party, to enclose, and then you go and show your customer. That was very difficult, because these are trade secrets. We don't simply show what is our margin to our customers. Otherwise, if you enclose like that, then they will next time go direct to the service provider. Then we lose business. So because of this, is one of the issue that most people, they may not be able to get a disbursement. Okay, moving on. Question number 10. Okay, this question says that, can we submit service checks on revenues accrued basis rather than on payment received basis? If yes, how to convert from, for companies that currently submit services checks on payment receipt basis to accrued basis? Okay, actually similar to last time in GST, you can use whatever basis, but only one condition: you need to write into DG for approval. If the DG say you are approved, then you can change. Otherwise cannot. You cannot just simply change according to what you want. So it is possible, but need to seek DG's approval. Once you have the written approval, then you're okay, you can proceed, no issue. Okay, moving on. Question 11. Okay, this question is a very short one, but the answer may be a long one. Okay, here you say, are there any update changes to club categories? Okay, so here the issue is not sure what type of clubs. So what we can say is that so far there are no changes to all the clubs. So we say Group C, this for nightclub, no changes. Group D, private club, no changes. There's another one, Group E, golf club, also no. Golf club, not the golf stick, the club by itself. That one no changes also. So everything remain status quo. Okay, next one, 12. Okay, this one is in relation to okay, maybe I read to you. A company not a taxable person file imported taxable services via the form SST02A. Subsequently, the company filed form SST02, any further action required for SST02A? That is file zero value submission. Is it required? Okay. How do we approach this? Is okay. If the company is registered for service tax, the subsequent filing to be declared is Form SST02. Do you remember? SST02 is for those who are registered. No further action is required for the SST02A. So whatever you have filed previously under 02A, that one is done. So you don't need to do anything about it. Okay. What about, let's say the company is not registered for service tax, then is registered for sales tax. The filing will continue using the SST02A. You continue to do it. Next one we have is we know filing for SST02A is required for zero value. So if you don't have any imported taxable service to pay by non-registered person, there's no filing required. But you have also another situation where, however, the company, let's say a registered person, is required to file the SST02 for new return. So if you're a registered person, even new return you need to file. But if you are non-registered, zero, then you don't need to file. Okay, that's how we approach this question. Let's go to question 13. Okay. This question is about, do retailers, traders via online website or e-commerce website subject to service tax? Okay, this is on website and e-commerce website. Okay, this one, how we approach it is that you are required to register if you operate an online platform or a marketplace. If you operate the platform, let's say, assuming that you are not a digital service provider, you are not liable to register if you are only a retailer or trader. So retailer or trader, you are only selling of goods, and you don't operate the platform. So you are just trading, retailer, and all these. So there's no need to register because you are doing all these goods and all those. But if you operate the online platform and marketplace, yes, you need to register. Okay, that's question number 13. Okay, next one. Question 14. So the question is, for service tax has been due and paid, but clients can't afford to pay our invoice. Okay, and maybe during this period where a lot of businesses are struggling and also possibly that they may be struggling to pay us also. So what is your opinion and suggestions? Okay, how do we approach this? Is this there are few situations, few scenarios we can look at. The first one is, let's say if the client has been wound up or declared bankrupt, then the service provider may apply for bad debt refund under Section 35, is under the Service Tax Act. So that's the first situation. Second one is, if the client is still in business, then you don't have much option but to continue chasing for the payment. Otherwise, or in the some options that you may can provide to your client is that you can grant them some installment plans. So as long as they keep paying, then that should be okay. So that's how we approach this question. Okay, let's see. Next question. Question 15. So the question is, the service tax charged by a shopping mall owner is part of the rental. Is it subject to service tax? Okay, this one I have shared also just now. In some of the example 1, 2, and 3 also. So, but okay, let's look at this. Rental of space alone is not subject to service tax. The owner could possibly package the preventive maintenance or building management service together with the renter. If you do that, like just now I explained that. So how do you put it in your the description? If you put renter alone, then you're okay. But you add on something else, and you put in one price, then the whole thing will be subject to service tax. So how you break it out is very important. If you can separate it out, the renter is not subject to. So that's how we answer the question. Okay, I think I've done all the pre-questions, I mean that submitted to us before this webinar. Concurrently, my colleague also, she's also answering some of those live questions in the chat. So I'm not sure how, okay, let's see. Pujan, would you like to bring some of those questions also? Maybe possibly can share with the audience on some of these questions and the possible solutions that we can offer.
I think most of it we already answer through live.
Oh, okay.
Yeah.
Okay.
Yeah, it looks like most of it is answered. There's no new ones coming through.
Oh, okay.
Yeah. Okay. Well, I mean, we are quite early. We are only about 1 o'clock. We still have half an hour. So if there's no more questions, I think we could start to wind down this webinar.
Okay, maybe
okay, just
okay. Sorry, proceed.
No, go ahead. It's just that we are coming to the end of today's session. But before we close the session, maybe Mr. Chong, you might want to have some final words or takeaways for the audience.
Okay, maybe since we are still early, and in view that the Father's Day is coming, maybe I can tell you a joke.
Yeah.
So,
okay.
So I think this Sunday is Father's Day. So okay, maybe this one I heard of it a long time ago. So one day a son asked the father this question. He said, Dad, can you tell me how much does it cost to get married? So then the father got very confused. And then he looked at the son into his eyes and said, Son, I really not sure because I'm still paying.
And he can't claim back SSP.
Yeah, can't claim back because the son is still growing up, so he's still paying all the whatever. So that's a joke that I can share with you.
Okay, thank you, Mr. Chong. To our audiences, our Marcom team will send out emails to all those that are registered with us. If your question was not answered or you still have some questions or clarity, you can fill up your questions in an online form, which will be sent in the email to you. And the speaker or the Crowe will try to answer you as best as they can via the email. Okay. So without further ado, so thank you everyone for your attentive audience, and thank you Mr. Chong and his team for sharing with us all these lovely updates and some of the tricks and tips to be wary of. Okay. So we have also posted, go back to the big screen. We have also posted some of the services offered by Crowe, and what you're looking at now is their contact. So you take note of this, or if you can't quickly copy this down, contact us in Marcom and we'll put you through to the right person. Okay, right. Thank you very much. Please do tune in. There are more webinars like this coming through. Just keep looking at your emails and our social media platforms for next ones to come. Yeah. Okay. I'm signing off now.